All right, good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini, futures trader. We do it every Thursday at 10 a.m. Scott's been trading for quite a while, over 20 years, and he's got a really interesting backstory that he's traded quite a bit of volume, incredible amount of volume back in the years 2002 to 2005. He does offer mentorship and educational services, a trading room, educational course, etc. I'll put this into the chat if you want to reach out to Scott. You've got his email and you've got his website and Twitter handle as well. So let's jump right in here and go through some disclosures and then hand it right over to Scott. So it's important to listen to this, the disclosures here. Bookmap, all Bookmap educational materials and information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. With that said, let's turn it over to Scott. And Scott, if you can share your screen. We'll get going here.
Oh, you got my screen?
Yeah, hold on. Yeah.
Okay.
All right, we're all set.
All right, so as far as volume's going, not a lot going on, and besides 50-point swipes in ES, 150-point swipes in NASDAQ, but there hasn't been a ton of volume. There was a little bit of buy ice here. It was close to threshold. I didn't draw it, and the market just ripped away 50 points from there, and now we're coming back. Very volatile environment, especially after yesterday's pummeling. So let's see here in the bigger picture stuff. This is an important zone that we're coming into right now. So this thing just burned right through a lot of these important zones yesterday, where I even tried to buy a NASDAQ. I'll show you that at one point, but we had talking about this in my room for the last few days, and this started the other day. 2 days ago, we had, see that buying tail 2 that launched us out of here, out of this balance, and that was a failed breakout where we gap lower yesterday. We're right through the high volume node of this, and then we had stuff drawn. This was the high volume node of this balance area here. High volume node is just where the most trade occurs in a balance area. Balance areas are just traders placing bets, right? But you can see this is where we gapped up this day, so this is an important area. We're right through that, like hot knife through butter. And this was an important area. You can see this was buying. We gapped up this day. This is where we opened. Buying tail was the bottom of this balance. We tried to rip right through that, or we tried to hold here. You can see that was like basically the only partial yellow bar yesterday of this entire move. I tried to hold that, or ripped right through that, and then into the close here. And then right now we basically just held this again for now. This is basically the high volume node of this, right? Kind of went a little bit below there, but you can just see even by this candlestick, look how treacherous this is. I mean, I forgot what they call this in candlestick terms, but I don't play off that. I just know this is like a selling tail and a buying tail, and it's undecided. So it looks to me like we're starting to build balance here, kind of right where we had balance before. So it looks like a chop fest. This zone is going to be important. One, for current stuff with this tail, if we can get above this tail, get above this zone, then I think we're coming back to where this directional conviction started after this attempted up bar yesterday. That's this bluish zone, whatever color that is. But if this fails, then I think we're coming back down to here, and then we'll see what happens here. This is the last stand for this guy as far as I'm concerned. I mean, this is directional conviction that led to this entire up move, 200 and almost 300 points, 250 points. So this is pretty much done anyway. If we get through this high volume node I don't think this is going to hold it. So we'll see. But right now we're kind of just bouncing back and forth, just waiting for some volume signals to give us a clearer view of things. Market profile. A second here. Got my floaty. What did we do that day to get rid of this floaty? I forgot. Bruce.
Yeah, I recall now. You need to go and find the instrument that you were on there in the tab, and then kind of hover over the chart, and that should get rid of it.
Hover over what?
So just click on the little floaty thing up there, the tooltip tool. Okay, and so deselect it, basically. The one to, that one. Yeah. So, and do that for basically all instruments.
Yeah, I didn't. Let's see. When I was looking at a couple here as far as.
I mean, it doesn't say what instrument it is there. It says stops were 2. There, you got it.
Okay.
You found it.
All right. So gold. And we got new Ludwig levels. We'll come back here in a second. I'm not that excited about trading gold because it's been an absolute clown show, but since the war started, but everything seems like it's a clown show now. So, all right, so this is ES. These are just prior. These market profile composites are from literally a year and a half ago, but you can see this value area was pretty close to the same, these pinkish, reddish, whatever. This is just a single day. I'm not putting too much weight into these, but you can see the market is still respecting them. So we're basically just bouncing around in here. And this was yesterday's move, just right through important areas, right? We right through the top of this prior market profile composite, right through this one, right through the bottom, and then down into this. So, any moves. So let's make this one day here so you can see it. So if we happen to get some kind of rally, you want to be looking here, and this is
NQ stop by NQ 191 contracts.
It's pretty much in the top of the zone. I would imagine we'd hold that. If we get out of here, then this might come all the way back up to here, and that's where I'll be looking to sell as well. Let's see what's going on NASDAQ. It's by far the highest volume of the day in here. You can see the stop run. It says 162, but you can see 188 on the on chart. It looks like they just released an update on the on chart, so you guys can see it in the on chart room and Discord, Bookmap Discord on chart room. I haven't downloaded the new version yet, so because it just came out right before I got on. See if that's correct. I mean, ATR, that's about 49. I thought it was more like 70. So the average shoe range right now in NASDAQ is close to 50. So we'll go over that, how I use that. So there's your zone. Let's take a quick look at this. This is an important zone as well. So yesterday with the same exact look as ES, we fail break out of that, right through that high volume node, right through this high volume node. This is where the zone I tried to get long yesterday. I had a little bit of profit, and then it just turned around and got smoked. So did I. And then we came down here, and you can see we held pretty much this zone, but it was pretty much high volume node. So the zone is
Stop by HT 180 contracts.
So I don't draw zones on high volume nodes just because I'll have too many of them, but this zone was, directional conviction down, and then we gapped up this day to here, so that's why this zone was here. But you can see we did hold the high volume node right here with a buying tail. So this is looking like it may find its way back up to this last time that it ripped down when it tried to rally yesterday with the only up bar of the day. Not even an up bar, but the point is this is important, right? So this is a little bit of balance here. This is just a regular trading hours chart too, so I can see gaps, but you can see there's a little balance in the yesterday close, and then yesterday we just tried to break down. That's a failed breakdown. We're through the high volume node, and you have a buying tail. So now we have a stop run too that we can play off of. If that stop run holds, I will take the long and watch very closely for a move back into this zone. So hopefully that didn't already happen because this market is ripping around.
That's crazy to see the NASDAQ stronger than the S&P, you know, a little bit stronger, at least in the bounce there.
Yeah, for right now anyway. Nothing was very strong yesterday.
That's true.
That was a very outside day. You know, I was telling my trading room, if you're struggling in a day like today, it's just. So the one thing you got to notice too, well, I'll show you this in a second. I want to make sure. See, first of all, you see we're bouncing around this yellow lug. So no matter what I'm doing here, I'm waiting for an ATR retest, and this may have already happened. So the bottom of this zone was, or the top of the zone was 42.50. We got up to 74.50. So that's not an ATR yet, right? So ATR right now is a smooth 51.58. You can see it right there. It's moving around. So I need to see 52 points out of here, retest, then I'll take the trade, right? So this is obviously, again, talk about it every single week. I risk based on the volatility, right? So for me, the way I trade these areas, I'll either, most of the time I'm looking for a full ATR or retest, a fail, then I get in, you know.
Gold ice iceberg by GC, 150 contracts.
About 90% of an ATR, I'll get in and then I'll place my stop 90% of an ATR on the other side of the zone. Well, a day like today, that means I'm risking like 150 points. Well, people maybe say, well, that's, you know, you can't risk 150 points. Well, the volatility is dictating that you risk 150 points because if this does this, and I get in here and I just put my stop right here because I only want to risk 20 points or 25 points, you're going to get stopped out 99.9% of the time just because the market doesn't care. These algos will rip this back and forth. We're in areas that doesn't matter as far as volume, right? So that's why you have to get away from the volume area to protect yourself from just, you know, nonsensical whipsaws that these 90% of the market is, you know, algos, 85 to 90%. So you want to stay away from the volume areas. So, you know, if I'm risking 150 points, that means this market could easily go 300 points. I mean, if that's the current volatility is 50 points, you can easily see 300 point moves right now. So we're not at that point yet, but I will, you know, if we get an ATR above there and retest, then I'll go along this setup. Other than that, I'm just going to wait. I would be more decisive the way I trade these aggressively. So you say if we got that stop run up here, you know, above the yellow lug, I use this. These are Ludwig levels, incredibly powerful, and especially for day trading. If I get a setup above the yellow lug, she calls it the directional lug, then I'll take setups aggressively, meaning I just jump in as soon as it moves 90% out of the zone, ATR out of the zone, I'm in. But you can see here, this is just bouncing around here. So I'm going to wait for ATR retest. I'm not going to put myself in a position where I'm, you know, trying to jump in a trade until it can prove itself. So liquidity wise, there's not a lot, and this is kind of strange for NASDAQ. You usually see just bands and bands of liquidity. You see one here. This will get filled, trust me. But you usually see like bands, and then it'll go up and fill everybody, fill all the big money so they can get their fills, and then it'll turn around a lot of times. But anyway, this is the only liquidity here. And that basically would have to get filled. That would be the ATR, and then we'd see what happens after that. So yeah, same with the downside here. So I will go short, but I need to see a full ATR. So 50 points below, retest fail, and then I'll go short. And down here was a little bit of ice. It was kind of broken up. You can see, so I drew the zone. I don't usually piecemeal in unless it's close to threshold, but you had 130 here, the spike. You had another 82 here, so that's over 200, and then you had some more here. That actually popped a little bit below zone. So I'm probably not going to play this zone. We'll see if it retests. So the rule of thumb is you always want to default to the most recent setup, right? So we're playing off of the stop setup. I don't most times I won't play. So say if it comes down here, I won't play that, even though sometimes you do get some nice reactions here, unless it led to directional conviction. Well, this zone led to directional conviction. So if this does come down here, I will take a shot and play it. Because I also know that's an important area, right? What area did we just talk about? The high volume node of this balance. So if this that happens to come back to that zone, that's this, and that's that. I would take that trade as a retest fail type of trade, where if it bounces off there, I will go long. Again, that's, we may not even get back down there, but I'm just, you want it. The only time you really want to play prior zones after something new happens is if it led to directional conviction, led to a strong move out of there, and this one obviously did. So, that was again 160 points out of there, 170 points out of there. So, just chopping around right now. So the other market I am watching, well, first gold is the most recent. Fire it off. Let's go in here, see what's going on. See the stop run. It's good size, 330 on my threshold, and gold is 150. So anything over 150 stops or icebergs is worth noting and drawing the zone. Just trying to see where this started. Let's draw it right there. There. Your stop run. Actually, that's not right. So remember, you want to make sure you incorporate all the prices that happen in this spike down here. So obviously this spiked up to here, and that was part of that. So now I have to adjust my zone. So I think that covers it all. And now we can play off this. Now we got to get that step one, right? I heard something else fire off in here too. Okay, so these are not threshold, right? So you guys got to be careful and not playing every spike on this indicator. Make sure it gets to at least 150, if not more. Right? Those are market moving events. 100, 75, 40, those are not market moving events. I don't pay attention to them, right? Just like most of the trade is randomness. It's random algos. You don't pay attention to every move in the market, right? Just like I don't pay attention to every spike in the SI indicator. So I'll come back to this in a second. Soybeans I'm very interested in. They had some number today, what do they call it? The soybean export sales was at 7:30. U.S. net soybean export sales and wheat. And there's been some very good activity in here. And you can see this is holding. So this was right when it opened, 268 sell ice here, ripped through that, buy ice, retested this zone. Basically, it didn't get an ATR even below this zone, and now we're off to the races. So, and now it looks, we didn't get an ATR retest, but the reason I didn't get long here yet, because we're right at the red lug. So I don't buy into the red lug because that's what important resistance it is. I wait for new lugs to be drawn, and then I'll go long. So you can see we're right here right now, right? So I do not buy, even if this setup occurred, which it did, I'm not getting long here when I know 7 points away, 7 cents away, the red lug. So what I'm going to do is I'm going to wait. Looks like it's going to rip. It'll make new lugs, and then on a pullback to that current setup I just showed you, I will get long, or if something new comes in, then I'll be able to get long. But I'm not buying into the red lug. Trying to find an example here so you guys can see when new lugs are built. Now let's see. Right, so this is a great example. This happens nonstop. So when you build new lugs, this is what I'm waiting for right now, this to happen, where we built new lugs, right? You want to see, this is directional yellow we talked about. You want to see directional yellow and or prior red hold. And you can see it's exactly where it held and moved higher. So now that's kind of the scenario I'm looking for here to go long. I'll show you the other reason I want to be long. I want to see new lugs built. So then yellow would be probably right around here, red will be way up here, blue here, and I want to see, bounce around and retest that zone, that big ice zone I just showed you, and then I'll go long. But I need to wait for that to happen. I'm not gonna see they're already buying this thing, so I'm a little bit above here. The new lug should be drawn, and then also this is bullish as far as bigger picture. You guys should always know your bigger pictures. Well, was anyway. This zone's important too. We'll go over that. But this was, you can see here, this is where this gap down, huge directional conviction that led to this huge down move, right? Basically was this starting on this gap. But this is actually the bar that started it, and that's where we're at right now. So I could see this struggling in here right now. If this gets above here, then we're coming back to these areas here. Right, so again, this was directional conviction that day. We closed here, and then we gapped down here. So that's why I have a zone here, and that was also the high volume node of this little balance. So this zone is very important too. So if this just rips right through here, that would be great for my thesis. You know, I think obviously long. I mean, doesn't take a rocket scientist to figure that out with this bar, but then that would probably draw new lugs. We come back down into here, into this zone, and then that'd be a good area to buy. And then I'm looking at these areas, and I think we can hit these areas today based on the volume that's coming through here. And obviously there was that number, so we'll keep an eye on that. But again, I need to see new lugs. I could short this as well if this area fails, but the problem is if we get an ATR above this zone, that disqualifies it as a short. Right, so right now ATR in here is 3.67, so we'll say 3 3/4 cents. You see the top of this zone was 86.75. We've gotten 6 points above there. That disqualifies this from a short setup, right? So I will not, meaning if this did this and then broke through this, I won't take shorts based on this setup because it disqualified itself by getting an ATR above here, right? The market should not get an ATR above here if this is a truly bearish situation. Right? So then I'll take a long off of that if we get a new lug, get new lugs, but I will not take a short off this unless something else comes in, and then I'll reassess. So we're in wait mode in that market. I just hear something in there. Did I miss something? See anything here? So threshold for beans is 150. I like to see a little more. If you see over 200, that's very good, but you can draw zones at 150 for soybeans. What I tell my room every day, this is one of the markets, you know, when these equity markets suck, you know, most of you guys are just staring at the ES, which is just not smart, right? You can't pigeonhole yourself into one market. When this market is trading terrible, you know, a lot of guys are trying to do this for a living, paying their rent, paying their bills. You're forcing trades because you feel like you have to trade. Well, first of all, you never have to trade. You never should think like that. But, you know, if you feel like you need to be doing something, then you need to be watching multiple markets, right? So when this market sucks, then you can watch grains. You can watch the other market that has just been incredible. When you get setups in here, we talk about this every week lately, natural gas, right? I mean, the thing moves 300-400 ticks at a time. So we talk about this, like I said, look at this chart. It looks like a Christmas tree, right? When it looks like a Christmas tree, that means it's algo, nothing but algos. This is the most algo dominant market out there. I think crude would be a second, gold probably third. But when you see algos dominating, algo's worst enemy is the big money. So when big money comes in here, they react, right? So you can see here yesterday, I'll show you a chart I did yesterday in here. And actually, I got out right at the close in my trade room. I'm like, you know what, because it was such a rough day yesterday. It was such a weird day in equities. I was just mentally beat. Speaking of which, natural gas numbers coming out here in 5 minutes. I was short this, and I got out, and the thing just, I mean, look, I got out at the yellow lug, and this was overnight. This is a huge, huge move. You know, this is what, 300 points? Yeah, 300 ticks. I mean, 300 ticks just overnight. I mean, this thing routinely moves. But this is the second short I put out. I don't post my stuff unless it's over 1,000 for the room anyway. I'm talking 1,000 P now, but this was the original trade yesterday morning. And again, guys, this is Trader Sync. If you're not using something like this to keep track of your trades, you're not going to make it as a trader. You've got to do this work, right? You got to keep track of your trades. And then I'm getting much better at it because I'm holding myself accountable to my trade room where I'm posting all my trades in there. Again, this is what this looks like. So I posted this yesterday actually in the trade room, right? So, you know, in here, and then you go to natural gas. This is the trade I was just showing you, right? So I show exactly what I saw. 518 broken ice, perfect example, right? pretty sad to have to go to this to show you setups since nothing's going on, but so this was monster buy ice. See all the algos. Algos don't like big money. We moved away. This was a full ATR at the time. We retested. We failed. This is where I got short. And we got out of one at, I think it was the prior market profile composite. We'll look at that in a second. And then I got out of the second one, the yellow lug, and messed around. And then later in the day, more buy ice came in, turned into broken ice again, did that. And that was that second trade. You just saw that I made the $790 on a one lot. And I got out at the close. If I would have held it, I would have made like $3,000 on it. So, yeah, so this is what, so I put, the way I do this for my room is I show the setup, right? Then I show everything that I look at, what it looked like at the present time, right? So this is what the lugs look like, right? And then I show what the relative volume look like, because that's important to know. And then you start to see tendencies like, wow, that trade work, I saw elevated, this wasn't elevated, this is actually no relative volume. That could be a sign too, where the market's not going to break out without big players. You'll find things like, you'll start to see stuff like, you can see this thing stopped right at the top of this composite. And then you've got that broken ice, retested, it failed. And then I got out of some there, and then I post what I did, where I got out. So I got out of some, this was my final exit at the yellow lug. It was like right around here. But my first exit was at this market profile. It came down to here. I got out of it right there. So I got out of one there, and I got out of the other one at the yellow lug, if I remember correctly. But you can see here, and then I post my final where I got out. So you guys should be doing this for it. Then I put my setups, what it was, everything I saw. So tried to pull the algo guy. I don't want to get into that right now, but broken ice, low relative volume, and you keep track of everything that you saw during that trade, and then this keeps track of all of these setups, so then you can see you're winning the percentages of when these happen, how well they did or if they didn't do well, right? And then you got the prices, and then you got the P&L. So again, this is TraderSync. There's discounts to this thing on my website. You guys got to be using something like that. There's a bunch of different ones out there, but this is the best one I've seen by far. So that's that. I'm not sure. I can't remember why I got on that tangent, but that was good for you guys to see. Oh, because I was telling you guys to watch other markets. So keep an eye on natural gas. There's no reason to torture yourself in ES and NQ when nothing's going on. Kind of like right now. Let's see here. So this is gold. Let me just make sure and see if we can get an ATR out of there, because here's a retest of that zone right now. Look at the bigger picture stuff. So ATR right now is 28. You can see right there. Just move the decimal point. Show you here. There. Okay, so it's 28. So did we get 28 ticks above this zone? Zone was 29. Just using the last two digits, 29. We got up to 48. So that was not a full ATR, right? So I don't even know if I'd be looking. I may be in this, should have been in this trade aggressively. Most likely it was ATR retest, and we did not get the ATR yet. So I don't know what setup this is. That's how I determine the setup, right? I have 6 distinct setups that I trade off of. This could be either a stop and hold, meaning a stop run, which isn't real buying. I mean, it's real buying, but it's not like initiated buying. It's just guys puking, right? So a stop and hold is when you get the guys puking, and then the big money comes in behind it and continues pushing it. Most likely scenario, especially in gold, is this turns into a dumb and dumber, meaning the dumb money puke, the retail trader puke, and then it fails, meaning this is not real buying. It just means it's a puke, and then it fails, right? So we don't know what that is until it gets an ATR out of here. That's how I determine what the setup is. So let's look at the bigger picture. Shockingly, I lost my chart. Any questions, Bruce, while I'm trying to find this puppy?
Yeah. So
before you start, let me just show you where we're at here. So first of all, that's a selling tail. That's not bullish, right? And that's a stop run. Where did the stop run occur? Right in the middle. This is a balance area. This is two-sided trade. Top, bottom, top, bottom. These are traders placing bets. When they were wrong, how did the buyers do when this moved out of here? Well, they puked them up, right? Markets are one of two states. They're either balancing or they're directional conviction. We talk about it, guys. I'm going to keep saying this stuff because one, there's always new people on here, but just to get it in your head, they're either balancing, traders placing bet, or directional conviction, right? The best places to take areas like, again, I don't draw my zones for high volume nodes, but because you can just eyeball it, right? It's just basically the middle of a balance area. So when you get straight beeline moves into an area, those are really, really, really good areas to take trades because all the energy, all the buying was done to get to this area. And then you got guys that are just staring at charts like this, like, hey, this is a good area to sell. And you can see, there's your selling tail. So I am very excited to short this gold setup now. Let's take a look at our lugs to see if I can enter this aggressively, and then I'll get to the questions. Over to gold. So we just built new lugs, right? So that stop run caused us to build new lugs. So we're just balancing on the yellow lug now. So even though I know bigger picture, this is a good place to short, I'm still going to wait because that's how, that's what I do with how I judge it with the Ludwig levels. I'm going to wait for ATR retest fail, then I'll go short. But I really hope it's this trade and not this trade. But if it is this trade, this is an important area either way. Whatever way this breaks. How many times can I pull my chart away and then not remember where I put it? There you go. Whatever way this ends up going here is going to be a bigger move. I'm betting it's this, especially now that you're getting that selling tail, right? Instant rejection. It's one of the 4 important areas of charting. I'm about to put that course out on my website too, so because people don't understand a lot of that stuff. Not don't understand it, but they want to be. It's through here. Well, now you're going to have a failed breakdown of this guy, and then this. You can basically make this a balance area, right? Top, bottom, top, bottom, top. This is a bigger balance area. So you're breaking out of a bigger balance area. So this is either going to break out and get through this, and that would be a failed breakdown, or this is going to hold.
181 contracts.
So this market is still in a bearish state, right? So the bigger moves are usually this way.
Gas Iceberg sell NG.
Here we go.
152 contracts.
Here we go, nat gas, baby. That's what I wanted. You guys are going to see how awesome those setups work in there, hopefully. Let's see what's going on in this little piglet. Okay, what's the question, Bruce?
Yeah, hold on, guys. I just had a problem here. So let me show Scott's.
So I'm not seeing anything in NASDAQ here as far as the concentrated volume, so I'm not going to draw that zone. Did we get an ATR below here?
NQ Iceberg by NQ, 150 contracts.
All right, so you got some waves coming in and all in the same area, so we may be able to draw this zone now. You had this one, yeah, this is all in here too. So you had 116, this is 132, this is 100. I just don't like piecemealing unless they're right back to back. I don't like piecemealing. I want to see concentrated volume in a particular area. That is what moves markets, not like these little piecemeal, 170. I want to see like 130 and then 150 right after that, so that would make 280, and then I would draw that zone. So I think we could draw this zone. So I'm just going to get, do we get it? An ATR below here first of all. 79. No. 26. Actually, yeah, we did. All right, doesn't matter now because we're ripping up and we have a new setup. So let's get this out of here. And we remember.
Iceberg sell CL, 150 contracts.
Like I said, you always want to default to the newest setup, right? So that's this. Got that guy started there. Continued. And this is more of a piecemeal one, but I think it's acceptable to draw. Get all the prices in that.
So I can answer a few questions along the way here, Scott. Corwin, no ATR within Bookmap. Scott is getting the ATR off of 5-minute candlestick charts. So that's what he's using. And then questions about the Ludwig levels. This is
now you understand why I call them lugs, right?
Yeah.
So, you can't say Ludwig 400 times in a day.
So this is a separate indicator. from Patricia Ludwig, and she offers it. We don't know
Pam.
what's behind it,
My name's Pam.
what makes up the Ludwig levels. So you'll just have to kind of, it's something that you either like or you don't. Scott likes them, he loves them, and you'll have to kind of dig deeper for more information on that. This is bigger picture stuff Scott's covering here, but what we're here for is going over the order flow within Bookmap.
Right. Yeah. So again, you guys just go to our website, ludwiglevels.com. There's a 3-day trial. You can say you saw it in the Bookmap webinar and you'll get a discount. She's got different, and then also for my trade room, she has discounts. So it's obviously proprietary, whatever it is, whatever component she uses. She's been around for like 12 years. These things are super, super powerful, especially with the context of the most important thing that you can possibly use is the Bookmap SI indicator volume, right? So when you have these and then you have the volume setups within these, and then you can also paint a picture of what's going on. Again, these are great for day trading. And then you also know your bigger picture areas that's the only edge you need in these markets, right? So don't make it more complicated than that. But again, just go to our website. She has the 3-day trial. Just put in there. You saw her here, and you're off to the races. All right, so now we got to wait to see what happens out of this thing. Again, you saw that we're just bouncing around the yellow lug here, so just an absolute chop fest, right? So guys, this is part of being a trader. You don't have to participate. You don't have to try to make sense of every move, because you're not going to make sense of every move, because 90% of the moves are algos messing around trying to take your money, right? So you draw your zones and you wait. You don't have to participate until you see your exact criteria you want to see. That is part of trading. We liken it to being a sniper, right? You wait in the weeds. Then when you get your shot, you take your shot. It's the same thing. If you're in here spraying bullets everywhere, you're done. You're going to be spraying your money everywhere too, and the algos are going to like to take it. So again, I tell people all the time, don't stop wasting your time and just PayPal me your money, and then you'll get the same result. At least it'll go to a good source instead of the algos, right? The point is, that's a joke, obviously. Just don't be spraying bullets. Wait for your setups, right? And that's all we do all day long. That's all I do all day long, and all I talk about in my room, right? So you can see we're just bouncing around this zone in gold, so we're waiting for that. Let's see what happened in soybeans. Nothing yet. I'm sure there's no new lugs in there. There was a setup in natural gas, I think. Let's see. That was good. That's what we want to see. 150's threshold, but I like to see more in here. And you're going to get some kind of reaction off of it. So you can see this is 250. So you see these swipes. Let's see. Oh, that was 100. Let's see where this occurred. And the big spike was the 215 here. Let's see how this looks. I'll incorporate all this just because natural gas is very volatile. So we just want to make sure we get that whole area. This is sell ice, so I like to make the sell ice black. So I know what kind of setup it is. Alright, so I got that. And smack dab in the middle of this zone. So what's the next step? Well, first, see where we are in the lugs. Again, lugs are short for Ludwig levels that I'm not going to say 400 times in a day. So you can see we just got above the yellow, but I could take this aggressively now, right? Because we're above the yellow. It did hold, and now we have a setup. So if this breaks out of that zone, I will take this aggressively, and aggressively for me is 90% of an ATR. You can see it's bouncing off baby lug too. We call these are like our minor Ludwig levels. These are the major ones. These are the ones I do not mess around with at all, as far as like you saw in soybeans, right? Huge resistance, huge support until they break and they build new ones. These are good for targets, right? But I don't say, hey, I won't go long here and do a baby lug. I just do it for the major ones, right? And then these are other ones too. But so you can see the algos are kicking in here where they usually do. Where did it kick in? Well, it kicked in a baby lug, but the algos This is extreme standard deviation, so a VWAP. So here's VWAP, here's one standard deviation. They call that DVA, or daily value area. Daily value area. And then here's 1.5 standard deviations. Here's 2, and then that's pretty much 2.5. And then the algos kick in and revert to the mean, right? So if there's no big volume coming through, they play games. So we're just bouncing around now, and you can see where that's at. It's right in the middle of the zone, right? So sell ice is also saying, hey, we're going to sell at this 2 standard deviation. We think this is nonsense, right? We think this move is nonsense, so we're fading it. Where did that also happen? Do you see? Are you starting to see picture? Like, you can paint a picture with a thesis, right? 2 standard deviation. You got baby lug, and then you go over here. What's it? Oh, look at that, top of market profile. That's why composite, meaning a merge of 2 days is the last 2 days. Somebody's taking a stand right here. So if they're right, this will probably hold, and we'll come back down to at least the bottom of this, because that's the tendency when markets, they touch the top and come back down to the bottom. Or this is going to break out, and then a lot of times it'll retest the top, and then it'll go, and then you want to watch the top of this one. And then that's probably pretty confluent with the red lug. Red lug's a little higher, but not much. So this is an important area where you can trade, right? So most traders, guys and girls, are just looking at this stuff. They're like, well, I'm going to short right here. Well, that's great. It may work out, right? But you don't really know what's happening here in the volume. We do. Right? This is why this is the greatest edge on planet Earth for futures trading. Right? Do you want to just guess that this is going to hold? Or do you want to know, hey, there's 200 sell ice there. That's a lot in this market. Okay. Well, now the big money's fading this area too. That's really, really important information. It's the information, right? Prices don't drive the market. Volume drives market. Volume drives prices. So this is where you play. So once again, there's a misconception, or there was when this first came out, when I first started talking about this. You had all these competing products to Bookmap saying, they don't know what these guys are doing. They could be hedging their positions. They could be getting out of longs, blah, 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 blah. I've never said that just because sell ice comes in, you sell it, right? Yeah, it's good to know if you want to be short that the big money is, taking the same thing, potentially, or they could be getting out of a long or hedging options. It doesn't matter. It's the area that matters. It's the volume event that matters, because there's always somebody on the other side of the trade, right? So this area is an investment. Somebody is investing in this area. Whether it's these guys getting short, if they're not, then they're getting out, and then you have the buyers that are investing in the area. You get it? So whatever way this breaks, you're going to get a big move out of here, because whoever's wrong is going to puke them up. That's trading, guys. That's all it is. Don't make it more complicated than that. So we're going to wait to see what happens out of the zone. If this breaks above here, I will go long aggressively. So now the third step is to check the ATR. Sure, this is a doozy after the number. Yeah, so we got 60 ticks. 59.68 is your 5-minute ATR. And quickly, ATR, these are the settings, right? This is just default on Thinkorswim. I don't complicate things, guys. Girls. I don't need to complicate it. I try to keep it as simple as possible. The simpler you make your trading, the better you're going to do, right? This works fine. 14 Wilder's ATR. You can Google what this is. You can dissect it all you want. You don't need to, right? We talk about this every week too. When you walk in a room and it's dark, do you flip the light switch on, or do you take the light bulb out and just dissect it and try to figure out why the light went on, right? Think of it in those terms. You don't need to know if the stuff works. It works. Just use it. Kind of like the Ludwig levels. I don't need to know. I mean, I don't like to use stuff that I don't really understand, but I don't need to know what her components are, nor is she going to tell me. But I don't need to know. I just need to know they work. I need to know these are. I mean, look at this. If you just blindly bought the blue lug here, I don't know. You like a 300 tick move? Right? So I don't need to know how this stuff works. I just need to know it works. And I know these work. I know that ATR setting works. So that's what I use.
Well,
so back to this.
Most importantly, though, is like you're looking at the level. It's just like you are at Stops and Icebergs, and you're looking for the order flow around that level.
Right. Because that's what drives the market.
Because that's where you're going to get the insight. Just because it hits a level is rather meaningless.
Yeah. Right. That's what people don't understand. They love all these indicators in their chart, and that they'll have 55 lines on their chart, and then they can't make decisions because well, this is the 200-day moving average and the 50-day cross, and then I have my MACD and blah 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 blah, and then you have 45 things on your chart. You're like, wait, what do I do here? So even if you do have the gumption to put on a trade with all your conflicting info, then the minute it goes for you, you're like, well, here's another setup is telling me to get out, or another indicator. This is the 300-day moving average. I should get out here. You don't need, guys, you're not going to make it if you use that stuff. I'm telling you, the more you have on the charts, the worse you're going to do. Keep it simple, stupid. Period. Trading is simple. It's not easy, especially mentally, but it's simple. You can make it simple and you will do much better. So anyway, this is the current ATR, 56.78. This is my high-tech spreadsheet that I developed, 51.1. Someone even told me how to do the ATR 90% on Thinkorswim. I just have never gotten around to it. Whoever did that, if you can post how to do that again, that'd be great. So anyway, 51 ticks is 90%, right? So that means I will get in this trade 51 ticks from the top of the zone. Look at the last two digits. It's 47, right? So 51 ticks is 98. That's where I will get in aggressively. We just went over why it's going to be aggressive, I should say. And then we put in 50 ticks above there, 98. I will stop into that trade. If I get filled on that, my stop is going to go 50 ticks below the bottom of this zone. Because, and I know, again, everyone's like, well, that's ridiculous. You're going to be risking 100 ticks, over 100 ticks. Guys, this is what the volatility dictates. If you get in here and you put your stop here, you're going to get stopped out 99% of the time. If you put your stop here because you don't want to lose money, you're going to get stopped out 99% of the time. Don't be that guy or girl. Don't be that trader. Put your stop away from the volume event, right? Make the algos, once this gets above here, make the algos have to push it all the way through the volume event. It's going to save you thousands of stop outs that are unnecessary because you're getting algo. I mean, look at the algos in this market. I was on a mentoring session the other day. It's like, the guy's like, I just can't do it. Like, I can't, I'm getting in and getting out. I can't just sit in the trade. And I'm like, okay. I said, as people are walking past your window, do you open your window and throw money out of the window, throw your wallet at them as they walk by? It's like, no, that's ridiculous. Well, it's ridiculous trading and putting stops in the middle of nowhere. You're just throwing your money to the algos. That's all you're doing. Again, you guys, I hope you like my awesome analogies, but it's true. So we don't know what that is yet. Obviously, nothing going on equities. Let's see what happened in this. I don't have my waterboarding up here. Here's the waterboarding too. That's tick strike. So this looks like, let's see, that was 30 quarter, 74.25. So that's what, 55 points. That looks like an ATR. What's ATR in here? Got to move my waterboarding. 60 ticks. Great. All right, I'm sorry, 60 points in NASDAQ. So now I forgot what it was. Just say 32 down to 77. It's not 60. This is not an ATR. Now this is an ATR, I think. Now I think we just touched an ATR. So 71, yeah, so that's 60. It's amazing too, guys. You would be amazed. There's algos that are literally just trading off the 5-minute ATR. You see it all day long, right? Look at that. That's almost the exact 5-minute ATR. Boop. Oh, what do you know? Right. So anyway, that's the ATR. Now if we get retest failure, I will short this guy. Not too excited. I mean, I'd rather short than go long. Obviously, look what's going on here. I mean, first of all, very undecided. Selling tail, buying tail, selling tail. These markets don't know what they want to do. But I'm telling you right now, if this can't get above this zone, this fails, and then we get through this high volume node, you're going to get another huge wave down today. Would be my call. In my opinion, but my opinion based on my experience of understanding the bigger picture. So right here is not a good place to be trading. Like, in the middle of the zone actually isn't it? But if we come back up there, that's going to be the top of this zone, this blue zone. There's your setup. I'm waiting for a retest. I'll take that short. That's a good risk reward play because if this gets motoring down, you're going to get a 300 plus point move, would be my guess. This is all part of trading. You're just sitting and waiting. You're waiting for I mean, this thing is just a chop fest, right? If you're in here trading right now, you probably have given away a lot of money on this back and forth trade, right? There's really nothing to go off of on market profile composites. Besides, we knifed through all this stuff yesterday, but there's really nothing. This was just a single day. Composites, again, are just 2 days merged. Right, so this is all basic stuff for a lot of you guys, but there's new people on here, so this is how I do this, right? So let's undo this. This is natural gas. This is the last 2 days. This was yesterday's trade. This was the day before. 50% of this value area, which is 70% of the day's trade, where it occurred, that overlaps this value area. So I merge them. The more days that merge, the more powerful the composite is. There you go. There's that zone. You guys would be shocked at how powerful these things are. And that's where that sell ice came in right at the top there. So they're either going to be right, and that's going to do this, or they're going to be wrong, and then we're going to do that. That's what we're waiting for. It's starting to get out of here now. Speaking of which, let me get my other accounts going here. Any questions, Bruce, while I'm doing this?
Yeah, no, we're doing pretty well. I don't want to ask you a certain question, but
sell NT, 155 contracts.
anyway,
So you can see more sizes coming in here, and someone wants to sell this, right? There's another 200. So what I normally do, I would normally delete this and then play off the new setup. But what I can do now, I've been doing this more and more often lately, right? So now I'm going to draw this new zone. I'll still let this fill. But now I'll trail my stop based on this new setup, right? So I don't have to risk, before I was going to risk 50 ticks below this zone. Well, I'll let this fill, and then I'll just risk 50 ticks below this new setup, right? So let's draw that. What's the question, Bruce?
yeah, never mind. It's okay.
Right. So let's make this a different color. I'm already filled. You gotta be quick in this puppy, I can tell you that. Let's see. All right. This is for sure a winner, guys, because I only got it on one other account. Got like 5 of them. Speaking of which, we'll go over that too, that Apex funding. Still doing that as well. There's discounts. I think today is the last day for the 80% stuff.
Stock by NG.
All right.
Gas stock by NG. Gas stock by NG. 312 contracts.
That's probably the sell ice puking. This is perfect.
150 contracts.
Why is it perfect? Because I can keep trailing my stop now on this long, right? And you can actually add. It's just this is moving so fast right now. By the time I use my 1980 Atari tool, drawing tool, that's probably going to be 50 ticks away from here. Here we go. There we go. All right, so that's the stop run. So now what can we do? Now we can trail the stop based on this newest setup, right? So the bottom of this zone is 8410, so it's 10, right? See right there, last 2 digits. Check our ATR, make sure we're accurate. 62. Now it's up to 62.85. Alrighty. There's my risk calculator. Stuff I know. 56.56, I round up, 57 ticks. So 57 ticks below here. So 60 ticks puts me at 50, so 53. I will step out of this trade. That would be right here. I will go just below this last sell ice because I don't want to stop in the middle of this gray zone, whatever color that is, so I will stop it right there. You could put it all the way back below this other, where I would have been originally, but I'm not going to risk that much. I'm giving this a chance to rip. If not, then I'll step out. So that's it. What did I say that was? It's 45. Hold on. All right. Keep an eye on that. Gold. Did I just hear something in there? No, let's see. Nat gas. So guys, to get this up, all you got to do is, because you, like you see right here, like things are firing off, especially multiple markets. I hear it, but I don't hear it. So you want to have this up too, so you can go back and be like, wait, what was that, right? So this is the alert page. Just go here, file, and alerts, and it'll bring it up. I have this up too, right? So the last couple were all the nat gas stuff. There was some crude. Let's check out crude. This market has kicked me in the teeth since the war started, but we'll take a look. Nothing. These are not drawable zones, so, which is fine. I have no problem not trading that market right now. Hey, what's going on with equities today? Anything? Let's actually see NASDAQ. We were waiting for a retest of that zone, right? There you go. Here's your retest. So failure, I'm in this. 80% or more of the time, these markets will retest the zone because it's a high volume area. It's like a magnet, right? Kind of like liquidity. You can see, I mean, look how good this zone was. So this is what I have on my 60-minute. I look at this thing. It's the exact area this is forming a new balance. 5-minute balance, but it shows you how, if you can draw your zones, how well they work. All right, so anyway, ATR is up to 60 here. That's sweet. Minus the sweet part. 60. 54 ticks is 90% of that. I didn't even need my calculator for that. I used my math skills. So 34.50 minus 54 is 80, 79.50. Right? No. 80.50. So I enter this trade. That's 90% of an ATR. So what I'm going to do here, I'm going to go a little, just because this thing's so whippy, I'll put it just below. I would be normally right here, but I'm going to make a lower low. That's probably the smartest thing to do anyway. What I'm talking with my room about is now that I'm finally, because it just takes so much work for me because I'm doing these webinars and the trade room and having a screenshot trade, so on and so forth. Like at the end of the day, then you got to go in here. You guys need to be doing this. Don't get me wrong. It's just and then keeping track of all your trades. So anyway, we've been using. First we were at 80% of an ATR. Then we were at 70. Then we're at 80. I was just trying to save extra points. Especially if the market retests the zone or doesn't retest the zone. Just save points. But the best way to do this is to get outside of an ATR on the retest fail, right? So I'm costing myself probably 7 points, but is 7 points a lot in this market right now? No. And that's also why I can only trade a one guy, right? Because of the risk I have to take here. So we'll see if this fills. What's that at? That's at, this is pretty substantial. It's 11 points difference, actually. So you could go just the normal 80%, 90% ATR. That would put you in at 80.50. I went 10 points lower just to avoid. It doesn't mean I'm going to avoid anything. I did this yesterday in ES in my PM webinar, and I got filled to the exact tick. Again, as usual. And then I did that. I actually didn't get stopped out. It came back, but it was brutal. You guys know from watching my prior webinars, that is one thing that sets me off every time because it happens 5 times a day and it just drives me absolutely batty, as you all know. So anyway, that's that. Let me put this in here. So. Absolutely nothing in ES so far. Whipsaw City. Like, I don't trade off these spikes. This is not threshold. This one was close. Let's see what this was here. 614. On a day like today, I don't usually go, like, that's my bare minimum. I'll go higher for thresholds. Like, if you keep seeing 1,000, well, you don't want to use 700 for that day. You want to go up. I rarely go below 700, but you can say, hey, there hasn't been one thing here today. I'm going to draw this zone in ES and trade off of it, right? We'll draw it. I'm not going to trade off it, but just to see how the market reacted to it is always good, right? Buy ICE. But it's also telling you something, right? You're not seeing any big money come in. That means it's going to be Whipsaw City. That means algos are just taking everyone's money right now. That's all that means, right? No big money playing, Algo City.
Yeah, that was actually the question, and people want to hear it. So what are your thoughts on algos? What do you think of algos?
What do I think of algos?
Yeah, what's
Can you
your
guys see my? Can you
opinion?
see my middle finger? Am I on screen right now? That's what I think of algos. Guys, this is why I'm doing this, right? This is why I'm educating. Algos knocked me out of the game. I don't know if you know, but I used to be a big trader. I used to make millions of dollars, and the algos combined with the low volatility knocked me out of the game. So, what do you think of my thoughts are on algos, right? So, there were a lot of years there that I was like, I actually left the business because I'm like, there's no way you can compete with these algos, right? Everyone likes to blame the algos, which is correct. They're 85% or higher of the market. But if you know what to look for and you know how to read the big money in the big money areas, and you know where to place your stops, the algo you can beat the algos, right? So that's been my driving force of this education, is because I have such animosity towards what happened to me, from being a $1 million trader to going to zero, right? And now I'm on my way back. That should be motivational for everybody on here. First of all, when I became a $1 million trader, I was trading one lots, right? It's not like they threw 1,000 at me. I was trading one guys. I went from trading ones to I could put on 3,000 within 2 years, right, of trading. So the point is, you can do the same thing, right? So that's why my story resonates with traders, because it's not like I'm some like high and mighty, you know, incredible trader. I mean, I think I'm a good trader, but it's like you're not watching someone where you look at it like kind of like if you're watching a major league pitcher, right? Like that's an all star. You're like, well, I can never do that, right? I don't have that aura because I went from millions to zero, and now I'm coming back. So the point is, you can say, hey, if he could do it, I could do it. That was my driving force when I first started trading. I walked in my trading firm and I saw some absolute morons making huge money. I'm like, okay, if these guys can do it, I can do it, and that's what drives me. I'm very competitive, right? So that my goal was to beat the traders there, to prove that I was as smart, if not smarter than them, or a better trader than them, right? So the point is, if I can go from millions to zero and making my way back, you can do the same thing, right? So that's why my story resonates. Forgot why I went on that tangent, but
Yeah, this is why I tried to avoid it. But like, anyway, there's the answer, guys, to the question. And full disclosure.
yeah, full disclosure. So the point was, these algos knocked me out of the game, and I'm back in the game and flourishing because of Bookmap. And the most powerful thing you can possibly use to trade, I don't know if I've ever said that before, is the SI indicator, right? And understanding what the big money is doing. Thankfully, the CME finally made this information available to the retail trader. And like I said before, I think they did that is because there were no retail traders left. It was algo versus algo. So they needed to get some fresh meat in there. So they decided to open up the books a little bit and let people see this information. That's why I don't think it's going away. If they went away now, they'd probably have a revolt, right? But it's to help us compete. Because if we don't see this stuff, how are you going to compete? And yeah, you can trade off the bar charts, but that's still, your areas, yeah, they're important, but you still don't know what's going on in the area, right? So this is all about understanding the big money, where the dumb money is. Again, I'm a retail trader too, don't be offended, but understanding that to combat these algos. That's who you're trading against, guys. What do you think is going on in here? Do you think they're just running it back and forth just for fun? No, they want to take your money. This market is a zero sum game, meaning it's guy against guy, right? Minus the commission side of it, but trader versus trader. So the point is, you're going against algos, and now you're going against algos. You're going against the brightest minds on the planet. So you better have a plan. You better have structure. You better keep track of your trades. You better control your risk and have a plan. If you don't, you're not going to make it. Just stop trading right now. And like I said, you can PayPal me your cash and just save yourself the anguish. At least it's going to a good cause. Again, that's a joke. All right, so we're waiting for this to come back here. Actually, this is a yes. I'm not going to trade off this zone. I will trade off of this zone. NASDAQ. We said that was 65. Oh, by the way, hey, well, natural gas is crushing. I'm telling you guys, watch this market. All right, so now we got to start keeping an eye on some lugs, see where we're at to get out of some. We got a ways to go. If you don't think this might get to the red lug while we're still on the webinar. That's how much this market moves. That's how much this market hates big money, right? Because the algos are like, screw that. So where are we going to watch now to possibly get out of these? I'll definitely get out of both at the red lug, baby lug, red lug, right in that area. But I will get out of one at the top of this market profile composite, 85.72. So what I'm going to do is I'm going to put that in right now. That's another 100 ticks away, by the way. And also, you need to know, though, if you trade this market, there's very, very little chance this thing just goes like this right now. I'll probably be tortured for 3 hours most times, right? Why? Because of this. The algos will snap it back. When big money's not playing, they'll do this. You'll think you lost it, and then it'll do this, and then it'll go. Right? I'd love for it to go right away, but you see it's already coming back. It already just came back 50 ticks, 25 ticks. So what did I say, 85.72? 85.72 is the top of that. So let's put that one guy in there. I'll just put it at 70. I don't need to squeeze out 2 more ticks. You can even go maybe 10 ticks below there if you want, but that's my first one. And then if it keeps ripping, again, this is if I'm off the screen and not watching, we'll get out right before this baby lug, 86.39. So let's say 86.35. Again, this is more of a feel type thing, but I don't need to see the exact lug because I know how powerful they are. I can run away from them. What did I say, 32? Those are my 2 exits. Or if something new comes in, I will then trail my stop based on the new setup. And you could go long this as well. Actually, let's do that. Let's add to this trade. Why not? So this is now hugging standard deviation. And most of the time when you're hugging standard deviation, you have large volume coming through. Or else the algos snap it back on you. So let's take a look. Well, there was one bar. So this is relative volume. This is showing you the exact time period for the last 30 days. So that was this move here, the stop run here, and the ice. You can see it was almost 4 times normal volume. So somebody just got run over. That's what you want to see, and that's why most likely we're hugging that standard deviation, because it's like a slow puke of whoever just got run over, right? So that's what you want to see. If you just saw this like red volume, meaning it's less than normal, you don't want to be holding on at extreme standard deviations. You want to be getting out, right? Extreme standard deviations of VWAP. Still not filled there. Let's get this back so I have this set up. Again, I'm fully expecting Whipsaw City here, but it could go. You don't know. You just put on the trade, you follow your rules, and you wait. That's all you can do, guys. And you don't sit there and get out in meaningless areas. And that's what most traders do. They get like how many guys jumped on that trade when I got in, and then it starts to come back, and then they peel out, right? This is a perfect example of what we talked about earlier. Right? How many guys are like, yeah, I'm gonna put my stop right here. I don't want to risk more than 20 ticks, and then you're stopped out, and then you're gonna watch it rip like that, and you're gonna be beside yourself the rest of the day. Place your stops in meaningful areas. 90% of an ATR below that, and then I just put it just below this prior zone. So I'm making this market push it all the way back through this puke zone where somebody got run over. Somebody had to get run over, right? Because when there's buy stops, there's resting orders in the order book that just got smushed, and it's holding, right? So it's got to get back through there, and it's got to get back through this other sell ice area that's also wrong. If you really want to be aggressive, you can put it all the way down below this area. This first sell ice that we were talking about. Right?
Soybean ice July iceberg sells at 150 contracts.
Speaking of which, that's the other market you guys should be watching. Soybeans and wheat. May have some, this is what I was expecting, but again, I didn't want to buy it into the lug. Hopefully we have some new lugs now. Let's take a peek. Sure. And yet. So this is also a potential signal. If you guys watched that Ludwig level webinar I've done, we posted in this room many times. If you guys don't have it, just scroll up, it's somewhere in here. If we get above the red lug and it doesn't build new lugs, doesn't have the criteria for new lugs, and it gets back below, that is an excellent shorting opportunity because it didn't have the criteria to build new lugs. So keep an eye on that. I think we're going to build new lugs, but it doesn't matter what I think. We'll keep watching this. All right, so still no fill on this NASDAQ NQ. We're waiting there. Doing nothing on here. This was that smaller ice zone. I'm not going to trade off of that, but I just wanted to show you guys where you can see how well. And look at this the first time it came up here. What, the exact tick? Look at that. You think volume areas matter? Touched it, down 14 points. Actually, more than that. I'm sorry. That was almost a 20-point move off of this. Now we're back at it again. This, again, you're not going to get anything more powerful than this information, this SIA information. This is raising up on me. Put it here. So I think this is the official ATR now. This is gold. 23 was the ATR. Bottom of the zone was 28. This move was up to 49. That was not the ATR. This one was. Or no, yeah. Shockingly, it was almost the exact ATR. And then the algo snapped it back. So now what I will do, if this goes retest, failure, I'll get in and go long. Remember, we talked about this already. I already know in my mind where we're at here, right? This is about to go through this high volume out of this guy. Right? Talked about this is a bigger one. Bottom top. Right? Breaking out of that through the high volume out of that. Then we come up to this stuff up here, probably. I'll be watching these zones closely, but that's what I will watch if I get filled, if I go long on this in this market. So if we get retest failure, I will go long. Why was I waiting for retest failure? Because we were bouncing around the yellow lug. It was not decisive. We were not decisively above it, or else I would have gone in aggressively. See that? I mean, technically we're above the yellow lug now, but it's chopping around. So I'm gonna wait, especially in this market. I mean, if you guys are not, you're new to trading or you're struggling, this is not the market you want to be trading. I can tell you that right now. Natural gas, soybeans, obviously equities. This and crude have been extremely difficult trades since the war started in Ukraine. So just keep that in mind. Any questions, Bruce?
Let's see. No, I think we're pretty good. Yeah, I think we're pretty caught up here.
So this sucks because if that red lug wasn't there, and this is my decision, right? You could have just said, screw it, I think there's enough going for this. I'm long. Look at this. Here you go. More than an ATR. Well, look at that. It retested perfectly. I've never seen this pattern before, except 400 times a day. And then you got, this is already a 9.9 cent trade. I would have taken this in a normal situation. I know how powerful the lugs are. So I wait. Right? And I may miss this trade, and that's I've got to live with that. You've got to have rules, and you can't be switching them up every day. Right? Again, like use an analogy, like when you go outside and get in your car. On certain days, you just decide you're going to drive on the left side of the road, or swerve back and forth. No, why? Because you'll die. Right? Same thing here. You'll kill your account. If you change the rules every day, you're going to kill your account. They have to be sound rules, but I'm giving you guys the blueprint, right? You know, it doesn't mean you have to trade exactly like me. Take the bits and pieces that you like and then build your own plan. It's your money. Do whatever you want with it. But, you know, I'm giving you the blueprint. So shockingly, I'm getting algoed here. I don't know why that would be. I don't know if this Christmas tree has anything to do with it. I told you. You get huge moves in here, but it doesn't mean that they're fun. It's a fun trade, right? This is not fun. I would not be surprised to see it come all the way here, mess around with me, make me complain, talk out loud, and then go. So if you guys like listening to me complain, just hop in my trade room. You can hear me. You should have seen me yesterday when I got filled to the tick on that ES trade. Here, you want to see it? Let's take a little peek. get me going here. Let's take a little peek. Is this it here? Oh yeah, here it is. How's that? And this one was so funny because this was the setup, and I usually do 90%, and I'm like, I'm gonna go just outside an ATR. I think it was an ATR and like 2 ticks. Literally the exact tick, and this came all the way down here. Actually, there was a stop run down here. It didn't stop me out, and then came all the way back. At the end of the day, I scratched the trade. But it's this. This is uncanny, and this is what sets me off. You should have heard me yesterday in my room. Like guys, I rehearse it. I practice like not getting upset, like going through the mental anxiety of like or emotions of if when it happens, and not sounding like a crybaby. I can't do it. I try my best. I know my room is probably real sick of hearing it. I just can't do it. I tried so hard. Just because I can't process mentally how that can happen that often, no matter, you guys have seen it on the webinars. Bruce, how many times have you seen it on the hundreds of webinars I've done? It's like, I just can't process how that, no matter where I put that damn order, that's the exact tick. I know I sound like a typical trader, but at least it's public and it's not just in my mind. That's the one saving grace I have. So again, when I get put away and I'm in the rubber room in a straitjacket, you guys would say, yeah, well, he actually was right. He did get ticked a lot.
Yeah,
All right.
we can verify that. Yeah.
So again, that's the only saving grace I have in it. It's not in my head, right? So because most traders are like, you read books and stuff, and it's like it's all in your mind, blah blah blah. Okay, yeah, a lot of stuff is. I agree. That's not. That's not. I'll go to my deathbed. I'll go to my grave, I should say, saying that. All right, so nothing is. We're just bouncing around all these zones here. This ATR in here is 50, 56 points. Point. I don't think we did. Let's see. This is 59 up to 89. No, it's only got 30 points above here. So this is still a valid potential short, right? The only time I will cancel this order, I'll cancel that if this gets a full ATR above. Well, that disqualifies this as a short setup. Or if something new comes in, then I'll cancel that as well. But hey, look, I'm getting algoed in natural gas. You guys believe this? So the thing is, if you guys already know this in advance, it's not so debilitating, right? You're just like, okay, I'm in, and I know there's a 90% chance it's going to do this stuff. This could come stop me out, obviously, but there's a very good chance it does this for an hour, 2, 3, and then it'll go. It's exactly what happened yesterday. I mean, look how long I was in that trade yesterday. Actually, no, the first part I got out right away. This was almost an hour. Well, this was a half hour, and then the second exit was, so it was about an hour and a half. I had to be whipsawed. If you know that going in, then you're fine with it. I mean, this is just showing, it's a perfect example how random markets are in certain areas, right? It's like, unless there's a volume event, they start playing their games. And do you want to be caught up in this?
100 contracts.
So even if I get stopped out, I say, congratulations. Wow, you got it through this zone and through this zone. Fine. I was wrong. The setup didn't work. On to the next one. That's trading, guys. It's a percentage game. You keep taking them. You keep taking them. You have the ultimate edge. You will make money trading. Did I hear something in the Dow? A rare Dow setup. Let's take a peek. Out of nowhere. Exact threshold. So threshold in YM is 100. I don't remember. I don't think we've ever put a trade on in the Dow in the webinar, so maybe we'll do it now. Remember, get all the prices in the spike. Step 1. Step 2. Check our lugs. Below the yellow lug, meaning I can go short aggressively. We're not too close to the blue, so I can take it. All right. Step 3. Let's check our ATR. TR's 90. Yeah, that's not fun. There. But again, guys, it is what it is. Like I can't wish lower volatility on the market. You've got to accept it and trade it. If you don't want to trade that kind of volatility, then don't trade the market. So 90 ticks. So 90% of 90 is 81. So 81 ticks out of here. I will take the short aggressively. Bottom of the zone, 94. $80 is 14, 13. Is that correct? I think so. That's where I'll short it. Hey, look what's below. I wonder where we're going. I wonder where we're going today. So we talk about this every week too. This liquidity is a magnet. This is the big money just sitting in here. Look at the difference of this volume versus 1 lots, 10 lots, right? The big money will get this market to this area eventually. It doesn't mean it's going straight here, but it'll get here. You check back at the end of the day, and I'd say there's a 90% higher chance that this liquidity is filled. That's great to know when on days when you're coming up with your thesis. Like let's look at. I know I don't have any zones drawn on this because I almost never trade it, but I'm sure it looks just like the other markets, but. Let's just draw a couple zones here. So there's, again, 4 important areas of charting, right? Tops and bottoms of balance areas, directional conviction, buying and selling tails, and high volume nodes of balance areas. So right here alone, this was a try to break out, held where it should, continued higher, then got a failed breakout of this, go right through this guy. It looks just like the other markets, right? And then down to here. So this was an important zone. Why was this an important area? This was directional conviction that led to this entire up move currently. Right? So that's what this looked like. You can see we're through there. I don't even know. Let's see what was prior here. I don't even know how far I have to go back here to see. Probably a while. Yeah. We have. Guess you can draw this area here. This is again a while ago. But this is an important area. Look what happened here. Directional conviction, buying tail led to this whole thing. Never came back until basically now. It's not here yet, but this is where I'm going to draw a zone. And if I get that short moving, I'm going to watch this zone get out of most of my 2. It's like you can draw other zones here too, but through all that. So this is the next zone down. See that? So if I get filled, I'll be watching this area. You can probably expect a reaction there, especially if it's a straight shot there. So another trade that's wait and hold and wait. So if this gets 90 ticks above here, I'm going to cancel this out. Why? Because we got a full ATR above the setup. And then you could actually play retest fail on the long side. Hey, look, I'm being algoed in natural gas. So, guys, this is a perfect example. Perfect, right? Look where this thing came back to. Oh, right to the bottom. Gone. How many guys got long, either stopped out here, stopped out here, stopped out here, stopped out here in the middle of it? This is meaningless. Look at these algos in here. Get away from the area. And you don't get algoed. And this is what I just was saying. This is what you need to expect from this market. It probably will do it again, maybe 5 more times. Who knows? But I already know that. It's fine. My trade's in. My rules are followed. If it's a winner, great. If it's a loser, not great. It sucks, but move on to the next one. Then the next one. I just keep harping on that because I'll have guys come in my room. I've told this story before. It's like, I don't like how you trade NASDAQ. I like the risk 10 points to make 20. Well, who gives a crap what you like? The market doesn't care what you want to risk. Like, that's the other thing that sets me off if you guys didn't notice, right? It's like, I don't care what you don't want to lose. Like I don't want to risk 50, 80 points, 90 points. The market doesn't care. The market cares about the volume area. Please, if you do anything, if you learn anything from these webinars, get your stops away from the area. Just cut your size down. That's where this risk sheet comes in. Right? My members in my room get this. I keep getting requests for this, guys. This is one of the perks of being in my room. Come in my room and you get this. They're on the internet somewhere. You can probably find them. But you need to put in your account size. You need to be risking at 1.5 to 2% of your trade. This will tell you exactly how much you can risk as far as contracts traded versus the points you need to trade. So I'm risking 90 points more than 90 points in the NASDAQ. I probably can only be risking probably like 150. But you see, the most I could put on is one line. If I had to risk 100 points on ES, I couldn't even put the trade on. Okay? You've got to follow this. If you're trading bigger than that, like if you have like a $5,000 account and you're trading even one E-mini, you're going to blow out your account eventually. I'm promise. If you didn't do it yesterday, right? I'm telling you, it's going to happen. You may get lucky for a while. There's going to be the anomaly that takes off and then never threatens it. But for most traders, if you're trading ones or twos or even one, some traders are trading more than that. They're trading like 5 lots with 5,000, 10,000. Are you out of your mind? You're going to lose that, guaranteed. I will bet you anything. I'll bet you your account that you lose it. So just PayPal me it and we'll call it even. Again, that's a joke. All right, Bruce, run out of gas a little bit. Any questions? Just waiting for something to happen here.
Yeah, no, I think we're kind of all caught up here on questions. Yeah, I'll let, as noted, I'll let you rant and ask the questions here. So, not
So
try.
Bruce, do you wake up literally in cold sweats hearing you say the same stuff? Oh, like you have literally listened. How many webinars have I done for Bookmap? A couple hundred, maybe, in 3 years?
Yeah.
Like, do you wake up like, oh my God, don't place my stop in the wrong spot. Oh my God, the hell goes. I mean, seriously, it's like you have to. I mean, do you just put me on mute? Do you just like mute it when I'm talking?
No, no, not at all.
I have
Not at
to
all.
hear.
No, no, no. And I mean, you're just reiterating your points. No, it's good. It's good. I was, joking mostly.
Oh,
But so I did put your links into the room or into the chat for both Discord and for YouTube. So if anyone wants to reach out to you, you have all of Scott's contact information there. And you can follow up with any other questions. Let's see, we do have I just wanted to mention a couple of things, Scott. Number one is you may want to look at this in the future here. We have this new indicator called liquidations. It's for the crypto markets only, and only for a handful of exchanges. It's
oh, great.
very
So now I'm not
much,
going to be able to sleep at all.
yeah. I mean,
Thanks a lot,
it's
Bruce.
very much like the stops and icebergs here.
Really?
Oh yeah, yeah. This is amazing. Like, but what it shows, I don't, somehow some of these exchanges are disseminating this data, that it's showing where people are actually, they're closing people's positions because they're getting margin calls. They're getting liquidated. And
You can see that?
yeah, yeah, it's
That's,
amazing.
so guys, I'm just telling you a preface to that, like a side note to this. When Bruce says something is amazing, pay attention. He told me 2 years ago, hey, Scott, you got to see the CME MBO data. You can see these stops and icebergs. It's amazing. Literally 3 or 4 months, I'm like, yeah, okay. Yeah, I'll get to it. Yeah, okay. And when I looked at it, I'm like, wow, this is amazing. It's the most powerful thing I've ever seen. I told you guys I was going to trade stocks. My first few bookmap webinars were trading stocks
Gas ice iceberg sell NG 156
because
contract.
I was so jaded from futures trading and losing all my millions of dollars and not be able to make money in there, right? So I was not going to trade futures. And the minute I finally looked at it, when he told me it was amazing, then I said, this is the most powerful thing I've ever seen. So point is, if he says something's amazing, it's amazing. So you can see something's coming in here. This is threshold. Now I can trail my stop again, right? So I can risk less on this new setup. Somebody keeps selling this thing, big money wise. It's a nice tight zone. If I can get it drawn and set up before I get stopped out.
I caught it. I caught it.
What?
I caught what you're saying, where you're going with that. Yeah, yeah. Look, we're offering this liquidations thing, and I know there's some update. We do have some updates on some drawing tools, I think, shortly. Anyway, what I wanted to mention though, Scott, is like you'll just be amazed how, if you really, I mean, for me at least, to really understand these markets, like this kind of random walk in price and people getting stopped out, or seeing these book sweeps. Now you can put that together with these liquidations in crypto, and it just shows you what's happening in these markets. This is how they operate. They kind of just meander, unless there's a directional move. They meander to hit pain points of people where they're compelled to buy or sell. They get stopped out, or they're getting liquidated in the same areas. So it just confirms what's really happening in these markets. And it's pretty incredible. I've never really seen anything quite like it. Anyway, I wanted to mention that. Another thing I wanted to mention, there's a trivia night tonight, guys. First place winner gets a prize. It's a fun event. It's at 4:30 p.m. East Coast time in our Discord chat room.
Yeah, I've seen that. I've seen you did it before. How do you do trivia with the internet? People just don't they just Google whatever you ask?
Well,
How does that work?
yeah, they really figured it out. Like it's pretty cool. It's pretty cool
Okay.
software. It's based on how quickly you answer, and you only have like 12, 15 seconds. But how you have got to get it right, and the quicker you answer, the more points you get.
Interesting.
Yeah.
All right, guys. So you saw what I just did there, right? So this is the new setup. 150. That's my threshold right there. Black zone. I trailed my stop. You saw my ATR. The ATR is 54. 90. Still at 60. So I went 90% of that. So 54 ticks below this zone. That's my stop. Right? No, that's not right. Oh no. Yeah. So 54 ticks below here puts me at 30-ish. But I went like I don't want to stop out, and this is the first zone we traded off of, right? I don't want to stop out in the middle of this, so I'll go a little. I'll go, I'll risk another 20 ticks to just stay outside this zone. You see what I did? But as new setups come in, I'll just keep trailing my stop. You could be adding too, just haven't added here. But so, and there's my first order. If this turns into broken ice, you can trade this zone with whole new, as a brand new setup with 2 more contracts, so on and so forth, or whatever you're trading. All right, so nothing really happened here. Nasdaq, again, if we get 50, 55 is the ATR. If we get 55 points above here, I'm going to cancel this. Wait for something. There's just nothing happening in these equities today. Nothing in ES. Looks like we may be finally getting through the zone, but again, this was not enough for me to trade off of. It's still right in that zone. Let's just check our Dow real quick and see what happened in that. So now, what do we say, 90 was the ATR? So that's an ATR. So now what you can do here, and I didn't get in this aggressively because we're below the yellow lug, but if this goes, here's your ATR, wait for your retest, wait for your failure, I will go long. This is canceled now, this short idea, because we got an ATR above the zone. So I'll be waiting for a retest there. What I'm going to do here too is I'm going to put in a notification. That's what it sounds like. Very pleasing. We come back down here because I want to know if we retest the zone. The problem is it goes off, and a lot of times I don't know what market it is. That's what is bothering. You can make your own sounds. I got to get on that. Literally like my own voice saying, "Heads up, dummy, YM," something like that. It'll be funny though. So still have this on. We know that.
Soybean ice to iceberg by ZS. 151 contracts.
One quick peek at soybeans to see if we built new lugs. Obviously, it's definitely long today. Oh, there's a little pullback. I like that. So remember now, if this doesn't build new lugs, I'm going to short this thing. If once we get back below we're getting it set up right now. We get back below this. Oh, there's the new lugs. Okay. So now I can at least trade it alongside, right? Here's your new lugs. What do we say? You want to see the market hold directional yellow and or prior red. So we're basically right there. So this should hold. If not, then I'm still going to go short. I'll wait for retest failure because we're dancing around the yellow lug. I'm not seeing it in here though. So what I will do, I know we announced it, but again, this is showing you net icebergs. So there's buying and selling icebergs in here, obviously. So it's not showing you the full 150. I'll still play a retest failure off of this zone because this was significant ice. I'll give it a shot. So I will go long soybeans. I'm waiting to do that all morning. All right, these, you can hear my waterboarding going off here. Markets are ripping now. So this is definitely, bottom of this was what? Yeah, that's 60 ticks. That's an ATR. The short idea is done. Now we wait for new setup. So do you see how like waiting for this area to resolve itself? It's like, did I go short right away? Was I like, oh, here's all I say. The minute we get below here, I'm getting it. No, I wait for my rules, and that helped me avoid getting smoked. Right. All right, guys. And then we didn't really talk about the funding thing again. I'm doing that Apex. I'm going to do a webinar next Wednesday. I'm going to send out a mass email with the link and everything with them, so you guys can ask questions. They're legit. I'm doing multiple accounts with them. I wanted to show everyone that my room included that it was legitimate, because we know there's some out there that are not, where all they're trying to do is take your money for the fees. But I'm going to do a webinar with them next week, and I'm going to go over my experience as well. And you guys can ask questions. So I'll send out a mass email. If you want to get on my email list, just go to my site, scottpulcinitrader.com, and then add in, there's like a button in there where you can put in your information. Then I'll send out the email with the link. For that, that's next Wednesday at noon Central, I think. Other than that, I hope you guys learn. Not a ton of trades today, but just good learning experiences, right? I mean, this is what trading is. If you think it's something different, it's not. Make it simple, stupid. Understand your volume areas, know the bigger picture, and don't confuse yourself with a bunch of crap on your charts, and you will make it as a trader.
Yeah,
That's all I
and
got.
everybody, if you like this, please like it in YouTube. Give them a thumbs up for Scott. This is just really helpful for us and helps us continue to offer these webinars. So
Yeah, like I told you, if you don't do the thumbs up, I will find you too. So
my
it's
God.
not a smart move. I'm kidding. I'm kidding. These days you can't even joke around with stuff like that. So strike that from the record.
Yeah, like the past results aren't.
Right.
I need to put in the disclaimer on that one.
Right. Disclaimer: Scott starts threatening people on the webinar. Just a joke, guys. Just a joke. Just trying to be funny. You got to laugh in this game, or you will literally be put away. So, all right. Hopefully, you learned some stuff today. And I do this every day in my
150 contracts.
I do this every day in my trade room. So, if you guys want to learn more, head over there. It's in Discord as well.
Thank you, Scott. Excellent webinar.
Sure. See you guys next Thursday.
Okay. Bye bye.
Thanks. Bye.